So the gloves are now off as far as the tariffs war is concerned, in which the U.S. President Trump fired the first salvo. As suspected, Canada, Mexico, and China retaliated with their own version of tariff imposition on American goods and services. Joining me now as we take the tariffs conversation to South Africa, where Chris Hart of Impact Africa Investment is standing by. Good evening. Thank you so much, sir, for making the show tonight. Let's get into the conversation. What do you make of the full-blown tariffs war that has just been unleashed between some of the biggest world economies led by the United States?
Well, I think the tariffs are basically a signal from the United States that they want to actually have what is called a fair trade deal. That, I think, is what Donald Trump has indicated right from the start. Because what seems to have happened over the years is that countries have actually imposed tariffs on American goods going into their markets, whereas they've enjoyed tariff-free or much lower tariffs for their goods coming into the U.S. markets. And the American president wants to try and see, can they also shift the tax burden away from what they call the Internal Revenue Service and actually be charging imports more than that, because he wants to stimulate local production. I think he's very concerned that over the years we've seen production shift out of the US, in other words, from a relatively high-cost production jurisdiction into lower-cost jurisdictions, so people make more profits, right, by producing externally and exporting to the US, and in the meantime, US workers don't have or lose their jobs to foreign workers. And I think he's saying that's ripping off the United States. He wants a fair trade deal. And I think that's what's been missed, is that when Canada and Mexico retaliate, they've missed the point. All right. And I think it's also a futile battle, because the US is a much bigger economy. They must actually have a look to see how they can actually resolve these matters more amicably. But I think those are the US's friends. And I think clearly South Africa's come into their crosshairs as not one of their friends, as one of their enemies. And they haven't even begun with South Africa and a lot of African countries. I think Trump is looking at we give aid to you, and then how do you behave on this world stage, like in the United Nations, etc. And they vote against and act against the United States and the United States interests, but they're very happy to receive United States money from the taxpayer. And Trump is actually saying no more. So I think after this, his attention is going to be turned to Africa, and I'm not so sure if it's going to be that friendly, especially for a country like South Africa.
All right, we'll talk a bit more about the impact on South Africa. It's the most advanced economy in Africa, and of course it has a huge agriculture exports out of that part of the continent, roughly $14 billion in exports from agriculture revenue last year. But let's talk about China. And we all know the relationship that China is beginning to expand on the African continent. Now China is imposing tariffs, retaliation on the U.S., is targeting U.S. agricultural products. How much impact do you expect the tariff exchange to have on global trade in the near to medium term? China also says it's going to file complaints with the World Trade Organization against the United States.
Yeah, I think it's actually quite ironic that China will make that complaint, because I think in years gone by, the complaints were on the other shoes against China. But I think certainly as they embrace the multilateral organizations like the WTO, the US is increasingly isolating from it. So I'm not sure what they can do. You know, the World Trade Organization can take measures against smaller countries, but what happens against the bigger countries like the behemoths like the US, China, and Europe, etc.? It's very difficult for that organization to be completely effective if the big nations don't really fully cooperate and subscribe to the authority of the WTO. And I think every indication is that Trump is taking the US on its own path rather than as I said, submitting to external authorities. I think this evening, for instance, or certainly in the last 24 hours, announced withdrawing support from the United Nations, for instance. The US has carried quite a big burden of the United Nations. And I think Trump is saying everybody must carry that burden, and certainly not the US alone. And anyway, so we're seeing certainly a new sheriff in town as far as the global stage is concerned. And I think certainly a lot more isolationist approach from the US.
Well, Chris, do you expect other countries to join in the tariffs war, or would they rather avoid a collision with the US and China, Mexico and China? Would they just wait on the sidelines and see how these big economies sort themselves out while everyone's trying to protect itself from the fallout, which we expect to happen? Because even some of the biggest shipping companies in the world are saying, look, if there is an increase in tariffs between the US and China, whatever, they've got to move cargoes and things like that. There's got to be some cost, or they will have to start rerouting logistics around the continent, around the world. So there's going to be a fallout of this for every other country, whether you're in the game or you're out.
No, absolutely. And I think you'll see different countries reacting in different ways. Certainly, I wouldn't be holding shares in global shipping companies at this stage. I'd be, sifting a little side. We saw this in the 1930s, and that may have exacerbated the Great Depression at the time, is when you did see a lot of protectionist behavior coming through. But I don't think you had quite the same skew as you had in the 30s as you had now, where you've got huge, almost like manufacturing hubs in places like China, Vietnam, and Asia, where manufacturing jobs have really shifted to those hubs, and you're starting to get that resentment in countries in Europe amongst the electorate. That was what Brexit was about, and also the US. So the electorates are starting to kick against what we call the globalist type of approach, and so you're going to see this tension between the more nationalist and more globalist approach. So at this stage, the more global, the more globally inclined leadership sits in Europe, for instance, in terms of the biggest economies, Europe and China, and to a lesser extent India, and the nationalist ones is basically led by the US at this stage. But you also have got other countries coming like Argentina, Hungary, and other countries that are looking at a more nationalist inward approach.
Okay, so let's talk about South Africa. United States is a major trade partner to South Africa and vice versa. What would the trade and tariff issues mean for South African economy that is trying to get itself back on a footing with unemployment high? It's just trying to resolve the Eskom electricity energy crisis. There are a lot of investments that South Africa really needs. It's also talking about energy transition. It's moving very fast on that lane. Then the new U.S. President Donald Trump is talking about drill, baby drill, going more for fossil fuel, while South Africa is looking for massive investments already into renewable and other form of clean energy.
Well, I think there's lessons South Africa can take and lessons South Africa can also avoid. At the end of the day, I think you're going to see South Africa and Europe align a lot more with this. South Africa certainly can't afford a trade and a reduction of trade with its second biggest trading partner. The US is the second biggest trading partner, but it's also a big investor. China is a big trade partner, but it's not as big an investor as the US. And China tends to behave in a more extractive way. In other words, they look to its foreign relations and its economic relationships with other countries more to actually pull things back to China rather than the American style, which is trade but also invest. So you've got a huge presence of American companies in South Africa and also across the continent. And some of these are globally iconic brands, but they are based in the US. And it does mean that a lot of that investment has created an enormous number of jobs. South Africa can't afford to go backwards on that. A lot of the relationship with European and US companies are what I call an example of import-led growth. And that's not a concept well understood, but these companies set up shop, they export to, let's say, a country like South Africa. When they've established a big enough market share, they then start to establish manufacturing facilities in there. And that's import-led growth. In other words, it starts with the import. It starts with the presence of these companies extending into our market. And then they shift, to a fairly significant production base. In fact, over the last century, a lot of companies have in fact shifted their base because their market share in South Africa and the continent actually gets bigger than their home market, and you can actually get some shifts that have taken place. But we're not seeing that much as far as China is concerned. It seems to be very much establish it for the purpose of actually improving their manufacturing exports. So they'll set up a relationship where we will import the raw materials but export manufactured goods. And that is not as beneficial at this stage. But again, countries must look after their own interests. And certainly I would say a country like South Africa, Nigeria, etc., should be looking to see what is the best deal we can get from the US? What is the best deal we can get from Europe? What is the best deal we can get from China and India? These are big. India is also a dark horse as far as investment is concerned, even though it's still it's a vast country. It's now about the fourth or fifth biggest economy in the world in its own right, and is also looking increasingly outward and also investing in Africa, and it's also increasingly driving its own independent economic and political relationships, and I think certainly a very constructive and productive partner.
Yes, okay, today is the 4th of March, and of course the opening salvos of the trade tariffs, as it were.
Yes.
So I'm sure we still have a long way down the line. No one knows how this will pace out at the end of the day. So we're going to touch base with you in the days and weeks ahead. Thank you so much. Do have a great evening there in Johannesburg. Chris Hart of the Impact Africa Investment. We appreciate your contributions on the show.